Well, good morning to the West Coast and to the Central U.S., and good afternoon to everybody else. My name is Brad Etheridge. I'm the Chief Marketing Officer for the Center for Tax Strategies and Resources. Really glad you're able to join us today. We're going to have some fun talking about strategic alliances, and Simon Singer has got some absolutely wonderful ideas about how you can help grow your practice through these techniques. We have about 35, 45 minutes together. If you have a bunch of questions and we have a reason to stay on, we're willing to stay here as long as you are. We'll share some ideas. If you have some questions, there's an opportunity to put the questions electronically up, and we will address the ones we can during the call, and the ones that we can't, we certainly will reach out to you and give you any details that you may need. I now have the honor of introducing our key speaker today, Mr. Simon Singer. Now, Simon, for those of you who don't know, he's the founder of Advisors Consulting Group. He's been successfully in our industry since 1966. And in that time, he's written several business bestsellers. He is a very sought-after speaker. He was formerly the world #1 ranked handball player and I'm talking about the world, not the U.S. And I would say of all the things that make Simon pretty amazing, other than all the groups that he's headed up and all the influence he's had on the industry over the years, he's also the recipient of the National Humanitarian Award, which is quite an honor. And with that, I'm going to turn the mic over to Simon.
Thank you, Bradley. Appreciate your kind introduction. It's nothing less than a son would do, but in any event, I appreciate it. What we're going to talk about today is strategic alliances and how I've built my practice over the last 30 years by creating relationships with attorneys, accountants, assets under management people, etc. There are things to do and there are things not to do, and we're going to skim the surface today because there's an interminable amount of information. But the reality is this is a prelude to the National Virtual Academy meeting that we're holding August 17th, 18th, and 19th, which we'll tell you about in a bit. But we're going to give you enough information today to be able to change the way you think about strategic alliances, specifically with CPAs. Now, everybody talks about they got a CPA alliance program, but hardly anybody does it on a regular basis. 95% of my practice is based on strategic alliances with tax attorneys and CPAs. 20 years ago, I had 150 CPAs signed up under me. I was with a national organization that claimed to be a broker-dealer for CPAs mostly, and enrolled agents as well. I did less business with those 150 than I do today with 6. And the reason is because I learned a lot about them. I made a lot of mistakes, had a few successes, but literally dozens and dozens and dozens of mistakes. I'm going to try to help you avoid those mistakes and focus on the things that we know work. My production increased from 1999 to the present. This says tenfold, it's probably 100-fold. So how do we get those strategic alliances? Remember, I'm talking specifically now about CPAs. And I don't want to give you the impression that a strategic alliance necessarily means that you've got a business partner. My objective here is to keep the CPA from being the deal killer, the thing that we're always frightened about, the thing where we have a proposal of our assets under management or our insurance strategies, and the client says, this sounds great, but I got to run it by my CPA. I want to show you how to head that kind of statement off and make that CPA aware of what's going on so that they aren't the deal killer. At worst, they become neutral, and at best, they become a strategic alliance partner. So you have to understand human nature, and it's really important, and there's many facets to this human nature. So getting them to sign up, getting them to say, yes, I'd really like to have more time, more money, or more fun, getting them to solve the issues of what are they doing for their own retirement, how are they going to buy out their senior partner, how are they going to take off at 3 o'clock in the afternoon and watch their kid play Little League Baseball, what are they doing for their own retirement, et cetera, et cetera. Those are pretty simple to get them to answer and pretty simple to get them to say, yes, I'd like to be able to do that. So, but getting them productive is difficult. And then keeping them productive after they've started is the toughest thing, because there will be a time period where they will think that you know everything that they know everything that you know, and they can do this on their own. And we've got a philosophy called the second man in the room, and it basically is built around a strategic alliance partner who, let's say, the CPA, the client, looks to because they are, quote, the most trusted advisor. And instead of them making a presentation, taking their CPA hat off and putting their salesperson or consulting hat on, the second they do that, they cease to be the most trusted advisor and now become just another salesman. So if we handle that understanding correctly, that we get to do the sale, and when we leave the room, the client can turn to the CPA and say, what do you think? And if we prefaced our presentation to the client with an education of the CPA of exactly what we're going to do and why, you'll find that it's much more simple, but they'll still try it on their own. Only this time, when they try it on their own and they're unsuccessful, they'll happily come back and knock on your door and ask them if you can help. So what you and the professional advisor needs to know about each other's skills and abilities, what we each do, what we don't do. It's every more as much as important. How the client relationships are maintained and how communication is expanded. And so the following is the things that we know about professional advisors. We know that the reputation is that they're concerned about their client's best interest and they're very protective of that client base. They're highly ethical. So they're concerned with the client's best interest, they're protective, and they're highly ethical, and they understand their fiduciary responsibility, and they're looking for ways, however, to differentiate their practice and add value so that they can protect that existing client base that they have and perhaps add to it and continue their revenue and perhaps even increase their revenue. So here's what the professional advisors think about us. They think they're smarter than we are. They're better educated than we are. They don't trust our industry. Basically, they don't trust us, and we make too much money. Now, that's not a really good way to start a relationship, is it? So we have to help elevate their understanding of our industry in general and us specifically, and we have to help them understand how even if they aren't licensed, even if they can't receive commissions, that we know how to help them increase their net practice revenue. Basically, we're an off-the-calendar adjunct business development department that can help expand their existing relationship with their client and help them develop new clients and help them to go back and bring back some clients that they've lost in the past. So remember, there is a conflict of culture between the professional advisor and the client. They talk attorney or CPA, and we speak client. So that's very interesting. The English language is the same, but the interpretation of the English language, what we understand that clients understand about the language that we speak, is not the same as an attorney or a CPA. Let me give you an example of a tax attorney that I work with a lot. We're in a meeting with a doctor client who used to be worth $5 or $6 million, and we started working with him, and now he's worth $150 million. I wish I could take credit for that $145 million growth, but we had nothing to do with it. What happened is that he was with a large HMO, and the large HMO was acquired. He had a 3% interest, and all of a sudden he was worth 100 times more than he was worth before. So we're sitting in the room with the tax attorney, and the tax attorney is trying to get them to enter into an arrangement where he does a series of layered grants. Grants is a grantor retained annuity trust, which I'll explain in a minute. But he wants to do a series of graduated grantor retained annuity trusts. But he uses the term GRAT, and the client says, Mr. Attorney, I don't know what a GRAT is. So the attorney says, oh, that's very simple. That's a grantor retained annuity trust. And then he continues on with this conversation, and I had to step in because now the doctor wasn't going to admit that he didn't understand the difference between a GRAT and a grantor retained annuity trust. I had to step in and say, wait a second, Mr. Attorney, all you did now was substitute words for letters. What he wants to know is, what does a GRAT do? Why is it something that's of interest to him? How does that help him accomplish his goals and objectives? What is the upside potential? What's the downside risk? And how much does it cost? And the client said, yeah, that's what I want to do. So that's what I mean about we're talking English, but we're talking a different language. And we have to be advocates for both the client and the professional advisor because they tend to talk by each other. The attorney or the CPA thinks that because the client is sitting in front of them shaking their head affirmatively, that means that they understand. And you and I know mean that sometimes it means he understands, but a lot of time it means I don't have a clue what he's talking about, but I don't want to appear stupid. Okay, so to learn more about strategic alliances, the little brief commercial, the center's virtual academy, we were originally going to do it in person, but obviously we can't do it in person any longer. So we're taking the dates of August 17th through the 19th from 8 a.m. to 2 p.m. With some of the highest level and highest quality speakers in the country. Let me give you an example. Bruce Givner is a nationally recognized tax attorney on tax strategies that you can implement after the academy ends. He charges $750 an hour. He's going to be with us for 2 specific hours. Joe Strazaria is also a nationally recognized attorney. He also charges about $750 an hour. He's the founder and creator of something called the Southern California Institute, their laureate program, which is a training think tank for CPAs and attorneys. Joe's going to be with us for a couple of hours as well. I'll go through some additional speakers, and then we'll talk about pricing and so forth and so on. All right, so here's the psychology of the alliance. The pyramid of success. This is taken after Coach John Wooden, the all-time great coach from the UCLA Bruin basketball team. And we're not going to have time to go into depth on each of these, but I want to show you what the titles are. You have to invest in yourself, which you're kind of doing with your time today. You have to study human behavior. You have to value what you do, because if you don't value it, nobody else is going to value it. You have to work on your weaknesses, kind of obvious. Important to always be well introduced. I don't care if it's to a client or to a professional advisor. You have to always be well introduced. You have to set the rules. We have this saying, whoever sets the rules wins, and there's always rules. You might as well set them, because if you don't, by default, somebody else is going to. You have to charge fees of one type or another. Otherwise, they know you've got to sell them something. So you don't go to the dentist and he says, well, I'm not going to charge you unless I do the following work. You have to ask questions. We all have read all kind of books with regard to answering objections. I will tell you the key to answering objections is asking another question. Got to be a problem finder, because a lot of times the client won't realize what their goals and objectives are. You have to actively listen. Incredibly important. And actively listen is not just not talking. You have to create goals and objectives. You have to help them do that, because it's our roadmap to get them where we want to go. You've got to get sign-offs on the goals and objectives. You got to have them prioritize the goals and objectives. If they can't create them, you have to help them create whatever objections they might have. Don't hide in the woods. Don't pretend that there aren't some objections, because there's always objections. So if you've got significant charges for whatever investment you're trying to get them to participate in, or high-level internal charges with life insurance, you've got to let them know so that they don't hear it from somebody else and then wonder what else you didn't tell them. You've got to edify the team members. Remember, we're trying to create these strategic planning teams. And the attorney, the accountant, the assets under management guy, their brother-in-law who happens to have an insurance license are all potential team members. You have to edify them, talk about how good they are, how successful they are, how willing they are to be able to help. You've got to consult with the team members. Don't hide in the bushes. What we were always worried about, we call them snipers, and that is the professional advisor that we don't know about, who's hiding in the bushes waiting to pick you off. You have to manage the relationship. That means you've got to communicate. You've got to not only edify, but you've got to communicate. Every phone call, every email, every letter, every conversation needs to be managed. You've got to be a problem solver. That's kind of obvious, but I will tell you, the more information you have, the easier it's going to be able to be to solve the problem. You've got to go to the client side of the table, think like they do, and then enhance their thought process. You've got to always make the right moves. It's far better to walk away from an inappropriate relationship than it is to try to stuff something down somebody's throat because you need the money. You have to be willing not to make the sale. And then lastly, you've got to control the controllables. There's always things within every engagement, within every phone call that is the objective. Let's use a phone call for an example. There's got to be an objective to that business phone call that you make. That's something you can control. You know the purpose of this phone call is, I want to set an appointment. And is what I'm talking about right this minute, is that helping me move forward in that direction of setting the appointment, or am I off on some ancillary issue that I feel like talking about? So we'll talk a lot more about that at the Alliance and the Center's Virtual Academy on August 17th through the 19th, 8 a.m. to 2 p.m. And for our members, there's also 2 or 3 breakout sessions in addition to that. That winds up being 18 hours of training, 6 hours a day with some of the most highly compensated advisors, attorneys, and accountants that there is in our country. Let me go back. If you want more information about that, you can call 877-258-2837. Let me get a little bit more into that faculty. In addition to Givner and Cersari and myself, Vince Dodonna is the all-time leading production leader with Guardian Life. Curtis Cloak, most of you on this call have heard him talk about his expertise in maximizing retirement cash flow. Walt Dallas is attorney who helps us do tax reduction plans. Dr. Jeffrey Galpin. Dr. Galpin is one of the premier infectious disease doctors that there is in this country. He basically heads up the majority of the research being done on the COVID virus, just like he did with the HIV virus with Dr. Salk. He happens to be a personal friend, fortunately for me. He happens to be my personal doctor, and he's going to let us know on those dates exactly what's going on, what parts we can believe, what parts we can discount. Rick J is going to talk about ESOPs, et cetera. I'll go through a little more in a minute. So what we are looking for in professional advisors, what they want. We need to know, are they looking for more time, more money, or more fun? Now, each and every one of those really are different words. If somebody could please mute their phone because I'm getting some background noise, I'd appreciate it. More time, more money, more fun. So more time might be, I want to get rid of some of my C and B rated clients, but I need them in order to pay the bills. More money might be, my wife wants that house at the lake, or I have to be able to fund for retirement. More fun might be able to take off at 3 o'clock in the afternoon and watch my kid play Little League Baseball. But the bottom line is every single one of those comes down to, how do I replace that revenue? What do I do? Where does it come from? And that's what each and every one of you can provide. We can help them get more time, more money, and more fun. We have to go to their side of the table. You have to do the same interview with them that you do with your client. Let me tell you the mistake that I used to make. I was pretty good doing discovery with a client. I was pretty good getting clients who agree to do things. I was horrible at getting the CPA to finally say, yes, that's a good idea, Mr. Client. It's a good thing you ran into Mr. Singer. He's doing my job for me, but you are really fortunate. So when I would go in to talk to the CPA, I'd start talking about me. When I went in and talked to the client, everything that I did was focus on the client. I wound up paying $10,000 for 4 hours of time with a business coach by the name of Mark Shear, who unfortunately is no longer with us. But what he told me is start talking about them. Stop talking about yourself. And the key is you do an interview with them just like you do with a prospective client. So remember, more time, more money, more fun. So what's going to motivate them? Fear of loss or hope of gain? Well, I can tell you right now, the fear of losing their client is far more motivating to them than the hope that they're going to be able to make an extra 10 or 20 or 50% in revenue. You know, if you increase their revenue by about 25%, you will increase their lifestyle by about 100% because, let me see if I can get my hands around this. Because what winds up happening is they have all their expenses paid for in the income that they have right now. The extra 25% that you get to generate for them basically changes their lifestyle. It doubles their lifestyle. And that's what we're trying to do, eliminate the fear of loss and enhance the hope for gain. So here are the revenue opportunities. These are things that we do all the time. We don't necessarily always call them by the same thing. We can do pension or IRA enhancement. It can be larger contributions, larger accumulations, larger distributions, creating strategies to be able to reduce the taxes on the distributions from those qualified plans. We have investment alternative estate plans. We have investment alternative income plans. Not everybody really cares about how much money they leave to their unwashed kids. We've got tax and retirement plans for small business owners and large business owners. We've got leveraged estate tax plans and terminally ill estate tax plans. There's lots of things you can do for people that are too old to buy insurance, who aren't afraid of running out of money, and it becomes a strategic alliance with a CPA and a tax attorney, and we can get paid handsomely. And there's also ways that the tax attorneys help us do what we call zero estate tax plans. Also, lastly, highly compensated employee tax and retirement plans. Here's the opportunities for revenue for them in zero estate tax plan. Just an example. There might be another corporation. There's going to be a one-time fee. There's going to be an ongoing fee. You can create a family limited partnership. There's going to be a one-time fee. There's going to be an ongoing fee. What's the ongoing fee going to be? Managing that particular entity, corporation, family limited partnership, life insurance, heirs trust, charitable remainder trust, family foundations, grantor retained annuity trust, grantor charitable lead trust, testamentary grantor charitable lead trust. Every single one of those has fees attached to it, and every single one of those has ongoing fees if we can explain the value to our strategic alliance partner about maintaining relationships with our mutual clients. So helping them understand that this is not just a one-shot deal. There are lots of ways to be able to enhance revenue and bring greater value to the client base, which increases the retention of the client and increases the potential for high-quality referrals. So here's potentially versus likely. It's not always a strategic alliance. Sometimes all that happens is you minimize the effect of a deal killer. If we effectively communicate with that professional advisor before we ever make recommendations to the client, we get to find out exactly how that professional advisor thinks. We get to find out exactly how we can bring that strategic alliance partner, that CPA or attorney, into the mix and help them actually create the plan. So when it's presented to the client, it's presented uniformly between all of the advisors, not just us. I no longer want that client says, hey, great presentation, great plan. Here, let me drop this off to my CPA and see what he's going to say. Now think about that. What in the world is the CPA going to say? Boy, oh boy, this is the greatest thing I've ever seen. Are you lucky to have run into Simon Singer? You should do whatever he says. Forget about the fact that I should have been looking at these things myself. Forget about the fact that I'm embarrassed because I didn't. Forget about the fact that I might lose you as a client because I never paid any attention to you, but you should do everything with Simon Singer. Not going to happen. What they're going to do is they're going to be protective of their situation. And the second that they're protective, we lose. Client loses. And the CPA gets to say, another client saved. I'm telling you, that's a real important process. So just remember, a little help can make a big difference. If you're making $150,000 a year now, I think you're going to come out of that virtual academy that we're doing in August, and we'll be able to get you from 150 to 300,000 if you'll do what we tell you to do. If you're making 250, we're going to be able to get you to 500. It's not all that difficult. It's having the confidence that you've got the resources around you, attorneys, accountants, high-level assets under management people. We're not an IMO. We're not a broker dealer. You don't have to change your contracts. It's a membership organization. You'll learn more about that at the meeting. Oh, by the way, we're also going to have about another 7 or 8 webinars over the next 4 weeks with various speakers that are going to be at the meeting. So Bruce Givner is going to be doing one of these half-hour things for us. Joe Cesario is going to be doing both of the tax attorneys. Walt Dallas, who's a tax attorney, is going to be doing one for us. Steve Pasek, who is a CPA with a very significant nationally based practice out of Virginia, he's going to be on this program with us as well. And next 2 days from now, Thursday, we're going to have Jason Kepi, who is one of the masters of digital marketing. But that's not what he's going to spend some time doing with you on Thursday. He's going to share with you the 5 steps that you can do to increase your net practice revenue if you never attend our meeting. So strategic alliances can really make the difference. And we consider Jason a strategic alliance partner. We consider Givner and Struzeri and Dallas and Pasek. We consider them people as well that can help us increase our practice. So Jason Kepi of SharePath is going to provide this 5-step process to grow your practice now. Check your email for the live workshop. It'll be at 11 o'clock Pacific time in, I think it's Pacific time. 11 o'clock. Thank you, Brad. 11 o'clock. And so I want you to give some thought to this.
Simon, let me, before you get into that, just because you're talking about Jason coming up, by the way, it's really easy too that you can just jump onto our website and click on the Center for Tax Strategies and Resources, or yourctsr.com if you prefer. And there's a tab called Upcoming Events. And you could register if you missed the email on Jason or the future ones coming up. We always post those on there and you can get a link from that site. Sorry, go ahead, Simon.
Thanks, Brad. So the investment for those 3 days, 6 hours a day, I'm not counting breaks in that time period, 18 hours of training is roughly $27.50 an hour for people that are charging the public $750 an hour. So just take out your calculators, which I needed to do, divide 495 by 18, and you'll see how we come up with that. So I'm going to throw this open for questions. If you want to register to the program or you just want to listen in on the additional webinars that are basically promotion of the virtual academy, you can go to www.yourctsr.com and click on the upcoming events tab. It's a $495 investment. In the next 48 hours, you can get a 15% discount, about 75 bucks. If you use the promo code VLAT817, or you can email the center team at yourctsr.com or call 877-258-2837. Bradley, why don't you jump in?
Yeah, I did get a question in from Brian from Bettendorf, Iowa, and he said, I am planning on attending. I haven't registered yet, but I'm planning on attending the academy. But I have one appointment on the second day that's going to take me about an hour and a half. Am I going to be able to receive a recording? And I can keep that for just so everybody knows, we're going to make recordings of the event available to non-members for a week. And that would be 7 days from the end of the program in case you want to go back, re-listen to something, or if you miss a piece of it. Members of the Center for Tax Strategies and Resources will have access to our virtual academy on our member portal. And on the member portal, as the members well know, we record almost everything we do. And it's really nice to be able to go back and listen to additional training or coaching or anything else on a subject matter that goes back, in our case, a little over a year. We've got hundreds of hours of training material, and it's really nice to be able to stop, replay, listen to the words, listen to how they're said, as well as picking up the techniques.
You know, there's something else about what you just said. Listen and how it's said. We spend a whole session on how important language is that makes a difference. So for instance, you've all been to seminars or webinars about charitable remainder trust. I never had any success in talking to people about charitable remainder trust. And what I discovered was the reason is people's preconceived wrong ideas about what some of those words meant. So the public, charity means I have to give things away. When I hear about this charitable remainder trust, okay, I'm going to give things away. That's going to make me poorer. If I put it into a irrevocable trust, that means I can't change my mind. So let's see, I'm poorer. I can't change my mind. Let's see, I disinherit my children. And if I buy life insurance to ensure that result, if I die, everything's going to be okay. So we like to spend time on talking about what things do as opposed to what they're called. So we might call that an enhanced income trust and talk about what it does as opposed to what the components are. If the client likes what it does, there's plenty of time to give them the necessary information to allow them to do their due diligence. We're very big on due diligence, but I don't want them to turn off just because I said a word that they don't like the sound of. It could be life insurance, it could be irrevocable, it could be charity. I want to be able to get them to say, yeah, I like that. How do we go about doing that? Then we can start talking detail. Yours, Brad.
I had a question coming in from Greg, one of our members. He missed the first few minutes of this and asked if he could get the presentation. We will have this posted within the next couple of days on the member portal. So Greg, no problem, just jump on there and you'll be able to pick up the pieces that you missed. I've got a question here from Stephen and Ames. Just a quick question about, will there be an opportunity to ask questions at the virtual academy? The answer is yes. We will be monitoring the questions, and there's a time slot available at the end of every presentation for specific questions. Can't guarantee we can get to all of them, but if we miss your question, we can do some individual follow-up because we will be charting those. Our start times, I had a question, are we pretty adamant about that? We definitely are adamant about the start times. Sometimes a speaker may go just a bit longer. And the same thing happens when we're doing a live in-person show. A lot of times questions will lead to other information that the expert's willing to share. So we try to stay pretty close to the time, but every now and then we run a little bit long. But one thing I will tell you about being at our live academies that we've had in the past, it's one of the few meetings I've ever gone to in 35 years where nobody ever gets up and leaves the room until there's a break. It's a lot of information in a short period of time, but it's also very appropriate to most of our practices.
You know, there's an intangible element here. Why do you think that very high-level CPAs and tax attorneys are willing to help us put these academies on? The answer is they're in the marketing business also. We are all in the marketing business, whether you're a CPA or an insurance salesman or an asset center management person or a tax attorney. Nothing new happens in our practice until we have somebody new to talk to. That's called marketing. Well, the reason these guys and girls are willing to help us is because we help them generate new client base. We help them generate revenue. There's going to be a couple of sessions specifically on tax reduction plans, a means of being able to go to a small and medium-sized business owner and help them reduce their taxes on things that their existing CPA missed. It almost always is available. Almost all CPAs get a little cocksure of themselves. It is very intriguing fee-based ways in order to be able to help them develop additional revenue by reducing current income taxation and getting the approval of the Internal Revenue Service. I think you're going to really enjoy yourself. In any event, Brad, do you got anything else?
That's about all I've got, Simon, and you're right on the post, so it's perfect timing. We have, again, just a reminder, we've got Jason Kepi talking on Thursday at 11 o'clock Pacific. Again, if you do not have that, can't find that email, no problem. Go to our website, Center for Tax Strategies and Resources. Click on the upcoming events tab, and there's a registration button right there. We'll get you in for that one. And we've got some phenomenal ones coming up over the next couple weeks. So watch your email closely or monitor our site. And we look forward to having an opportunity to spend some time with you virtually on the 16th, 17th, and 18th, 17th, 18th, and 19th of August for a virtual academy. Simon, I was going to say something that's really been fun when you're looking at the scheduling of this, because that's always such a challenge. Excuse me, trying to put all that information into a time slot for a live event. It is so nice not to have room setup changes and breakout room and the distance lost between waiting for speakers to come back up. We can get so much more in that period of time. It's really going to be a pleasure. I'm really looking forward to this thing. I can't wait to.
Brad, what we also get is the substantial reduction of cost for our attendees. They don't have to get on a plane, which most people aren't going to want to do today. We don't have to worry about a hotel, whether or not they're going to continue, that's only a month away, continue with social distancing, which means that if we have a room, if we have 100 attendees, we're going to have to get a room for 300.
Yeah.
You don't have to pay the cost of staying in a hotel, but you are going to have to commit the time if you want to get the value.
Yeah, I'm planning on wiping down my computer after every speaker just so that I can be safe.
That's a very important message, Brad. Thanks for that one. In any event, everybody, thanks for your time today. We hope to see you on a future webinar. Take care. Bye-bye.
Thanks, baby. Bye.